Hi, welcome to the Market Alert for Friday, the 6th of September 2019. So stocks and bond yields surge on resumption of trade talks, and then the metals were slammed on this basis. So let's have a look and see what happened during yesterday. So starting off in the Dow daily chart, so we can see the market higher there, settling on top of the resistance that we had at 26693. You can see there we've got this resistance. All of these points are resistance as the market tries to move back to the upside. Volume is incredibly light, no surprise there, and the market bouncing off the 200 bar moving average there as it starts to move back to the all-time high at 27,401. So during yesterday's session, I'll just drag this across. We can see prices were ramped higher, moving up sharply 150 points out of the starting gate there, and then the market trading sideways too low and just drifting after prices are traded up to the R3 level there. So we know when we get to the R3 the market is generally exhausted, and this is the classic case of this happening here. And then as we go into the overnight, the market drifting lower, trading down towards the 200 bar moving average, didn't quite make it, and then bouncing straight back off to the R3 level there overnight. However, prices there then drifted lower and have since come back to below the 200 bar moving average. But again, you can see how quickly they tried to move the market back up to this level. And the reason for this is today we have the non-farm payroll figures out at 1:30. It'll be interesting to see what the figures are. Notice that the forecast is very close to the previous. This may be some sort of insurance policy by the Fed so they can keep rates currently where they are. Also note that Powell is going to be speaking as well at 5:30 p.m, which is also going to coincide, I think, don't quote me though, with the bill in the House of Lords being sent back to Parliament, which is going to obviously impact on the pound. So let's have a look and see how the pound traded yesterday. The pound is loving the fact that there's no Brexit at the moment, and you can see from Tuesday, the market has moved higher on Johnson losing every vote that's been made in the House of Commons so far this week. So it's bullish for the pound. If we don't get a Brexit, without a doubt, makes perfect sense. And prices starting to move higher. And if we look at yesterday's price activity, you will see there that initially we started to move lower. We saw buying pressure coming into the market. We didn't go down to the 200 bar moving average. We just took out the 2050, and then we got the signal to move to the upside. And we see the pound moving up there 100 pips before just drifting sideways and sitting on the R1 level there. And it's been very tight overnight because obviously this market waiting on news as well, which, as I say, coincides with Powell speaking at 5:30 as well. So you could get a sort of a late Friday bit of a surge into the market if the bill is passed. So a bit of selling pressure around at the moment as prices are starting to move higher, but there's a lot of time yet left in the day. Meanwhile, in the implied volatilities, let's start off with this one. It's interesting actually because given the 370 point move in the main session yesterday in the cash market, only a slight drop there of 0.10 in the implied volatility. So the traders aren't necessarily convinced and are either edging their bets on the basis that the non-farm payroll figures could be worse than forecast and send the market lower. So there's a bit of insurance priced into these options here. That said, if we look here, we can see that we're below the 20 bar moving average, so we're still green on the implied, and we're above in the prices there as well. So it's still bullish, but like I say, from a macro point of view, they are slightly concerned as far as today's non-farm payroll figures. I would suspect is what's being priced into those options. The yield hasn't been updated, but they did rally yesterday all across the board except for the 10 and 3 months. So as soon as that's updated, I will bring it back. And whilst we're here, Deutsche Bank continuing to move higher as well. It's above the 200 bar moving average, and yesterday the European markets rallying strongly on the trade deal or trade talks in the US, which is quite funny actually, because there's a great graphic here where they actually explain it to you, obviously in a comedy way. I'll just see if I can get some control over the mouse here so you can see it. Okay, so what we've got is this humorous graphic. No progress is made. So administration is tough on trade with China. And when we see that, then market sells off. And then the administration hints at a resolution, phone call, tweets, and then the market rallies. And this is where we are in this constant trade war cycle with Trump and China, which I thought was quite humorous, but actually makes perfect sense as well. As I've said in the alert for the last few weeks, it's amazing what a Trump tweet can do for the market. And then finally, in Bitcoin, we'll start off with the daily chart. The market's stuck in a sideways range, and this was certainly reflected yesterday as prices hugged the 200 bar moving average, but it needs to break out of this sort of ascending triangle formation that we're getting there. That's what the market generally does when you get this sort of pattern. In the 4 hour, you can see how the market is hugging this 200 bar moving average, and it's the key here is to wait for the market to come back, find some support, and then hopefully move to the upside. And this is what we saw in the 15-minute chart yesterday. It was very choppy, and it was just like a magnet yesterday with prices, and the 200 bar moving average was a real tussle. And eventually, as you'll see overnight, after just trading sideways and no decent trades, the market, you can see the buying coming in there. You get your 76% retracement. They have a run at it. They get through with the buying, and now the market's moved higher. So what I would do here is wait to see if the market will come back down towards this level, bounce, retrace 76% retracement, and then move back to the upside, just to hedge the trade or hedge the bet and improve the risk reward there. Okay, that will do it for this one. Heading into the weekend, don't forget non-farm payrolls at lunchtime, Powell at 5:30, and the UK Parliament bill for no deal we should have gone through the House of Lords, I think, and then see what happens with the pound as well, unless I've missed a day, because like I say, I don't really do politics, but I'm sure it was Friday it comes back from the Lords to the House of Commons. We'll see. Okay, thanks for watching. See you in the next one.